For those of you just joining, we had over 100 registrants for this webinar. So a lot of interest in this deal.
Let's kick things off.
Okay, so thank you all for attending the official webinar for the Springs Retreat and Spa. This is a 59 unit boutique hotel that we are purchasing in Eureka Springs, Arkansas. And I hope that what you get from this webinar is actually Jacobo, I, and Tim were just there, and we had so much fun. Like so much fun visiting this really special property in this really unique market. And we're very excited to present this opportunity to you. And I hope that you're able to feel our excitement through this process and see kind of just how pumped we are in this deal. So without further ado, let's get started. Quick little disclaimer. This is a 506c offering, which means it will be available to accredited investors only. That's the reason that we're able to talk about it out loud on Facebook, promote it, all these kind of stuff. So if you are not an accredited investor, I apologize, but you will not be able to participate. And typical disclaimer, all investing involves the risk of loss. You're adults. The SEC defines you as capable of making your own decisions. So that's where we are with that. And little housekeeping items. Everybody's doing really good being muted already. If you do have questions, please type them in the chat. We'll do our best to get to them as quick as we can. And then there will be a section at the end for all vocal questions if you have more at the end. All
right. Awesome. Thanks, Michael. So quick overview here before we get started. We're going to be talking about the reasons to invest in this deal and the returns that you can expect. We'll go over the numbers, the opportunity that we have right now with buying outdated motels below replacement cost and tapping into the $1.3 trillion industry that's the wellness travel, and that's accelerating to $8 trillion by 2028. And we'll go over the investment summary. We're looking at a $50K minimum investment with a 10% preferred return for anybody that's investing over $250,000. Our target IRR to investors is 30% with the 3x equity multiple.
All right. So really quick, we'd just like to introduce ourselves. So I am Michael Wagman. I am the co-founder of Nimble Capital Group. We're a boutique investment firm. We invest in multifamily, ground up development, retail, land, and now boutique hotels as well. And I have raised about $23 million, which I actively manage. Jacobo?
Yep. So I'm the author of Short-Term Rental Secrets. I built and sold a 7-figure e-com business while I was still in college. It was actually one of the top wedding gift brands on Amazon, and it was Mr. and Mrs. Everything, which is funny because up to that point, I hadn't even been to a wedding, but the data said it was a good niche, and that's where I got all of my digital marketing background, and all those skills that I honed are now what I transferred over into the hospitality space. I built a short-term rental portfolio that was later acquired by a private equity fund, and we grew to over $10 million. This was actually backed by Hilton's former chairman, and now we're here buying boutique hotels, which is a huge opportunity. Now, part of our sponsor team, there's also Blake Daly. He's our boutique hotel hospitality advisor. He currently owns and manages a 130-unit boutique hotel in Tennessee. Derek Peterson, who's our strategic branding and real estate growth advisor, and he has been very, very involved with hundreds and hundreds of multifamily projects across also hospitality and tech. And we got Paul Hershko, who is the owner and founder of Discount Lots, and he's closed over 5,000 land deals across the U.S., and he specializes in undervalued assets and creative structuring for high return investments. So before we get started on the actual opportunity, I want to give a brief overview on why boutique hotels and why we're so bullish in this space. Back when I was doing the Airbnbs, they were all residential properties, and a big limitation that we found was we couldn't really cash out of these investments because we couldn't force appreciation. So even if our Airbnbs were doing $500,000, $1 million a year, well, the bank would only appraise the deals based on comps, based on what the neighbor's property was. So we found a lot of limitation with this. We also started getting a lot of different regulations. Short-term rentals all across the board are getting heavily regulated. We had everything spread out. So we had different homes. We couldn't have just one team on site. We had to send people to all these different properties. So our cleaning team, we couldn't use the same maintenance team. So our cost was spread out versus a hotel where you have the economies of scale, right? We're able to operate these remotely. I call boutique hotels commercial Airbnbs. So we're using the same efficiencies of short-term rentals combined with the scale of hotels. And of course, we get huge tax benefits now with the 100% back in bonus depreciation with the big, beautiful bill. We're able to just pass on all of these depreciation to our investors. Now, our investment thesis, it's pretty simple. The opportunity right now is to buy a lot of these outdated and under-marketed hotels because commercial real estate, it's valued based on the income that it generates. So we're able to acquire these properties at way below replacement cost. They have no digital marketing, no online presence, no revenue management, and we can come in here, quickly optimize a lot of these things. So we acquire and renovate them, we stabilize and then refinance the asset. Now, quick disclaimer here for this exact deal, we won't really go for a refi because as you will see in a second, we were able to secure incredible terms. So a refi would not make sense when we have interest only payments, but we'll get to that in a second. But what our huge strength is applying efficient systems, AI, technology, digital marketing, and of course, working with influencers, travel influencers to really boost the returns of these assets, and then going for an exit once we have achieved peak valuations. And why now? Right now, there's a huge opportunity. Like I mentioned at the start of the presentation, there's a huge wellness boom, and it's projected to grow to 8.5 trillion by 2027. If you look at all the new generations, millennials, and all the upcoming generations, they value meditating, spiritual, all this wellness boom is huge right now, and we're going to be tapping into that. There's also been a trend that post-COVID, people are investing more on experiences than they are on things. So we're coming in, tapping into that growing industry. We're also buying these undermanaged properties at a huge discount. There's currently 10,000 baby boomers every single day retiring, and a lot of these assets have been mismanaged, they're dated, and we're able to acquire them at a really good price. And like I mentioned earlier, these tighter Airbnb restrictions are actually driving demand back to hotels. So the experience economy. Today's travelers, they're seeking more than a standard hotel room. They want unique, unforgettable experiences. And boutique hotels allow us to give a curated, personalized experience. And we've done this before with short-term rental. We absolutely crushed this. Now we're replicating this in the boutique hotel space.
All right. So why Eureka Springs? I really quickly want to start telling you about my experience flying into the airport in northwestern Arkansas, because like many of you, I'd maybe never spent any time in Arkansas. I wasn't really familiar with Arkansas. But northwestern Arkansas is actually where Walmart is headquartered in Bentonville. And so I fly into this airport and I think it's going to be like a tiny little airport. But sure enough, the whole thing is under construction. It feels brand new. And you can just tell that they're pumping a lot of Walmart money into this whole area. I'm driving through the town. We rent a car. It's about an hour drive to Eureka Springs. And I'm seeing $2 million homes, golf course communities. So there's a lot of money concentrated in northwestern Arkansas, which was a big surprise to me. But let's get to the town itself. So it's nestled into the Ozark Mountains, and it's called the Little Switzerland of the U.S. And I have to say that is very, very aptly named because it really does feel like you're in just some charming, like you've been teleported to Europe. You've got these kind of winding streets that are just lined with historic buildings, and it's a town of only 3,000 people, but I swear there must be 3,000 shops. In the downtown area, you just walk down and there's a shop everywhere. And so it's like one person per shop. And, you know, people are just everywhere walking around, exploring the downtown area. There's all these caves and springs in the downtown, and it's just so unbelievably charming. Um, it's not just, you know, a outdoor paradise, which I'll talk about in a second, but there's actually a cultural renaissance going on. So the daughter of the Walton family actually invested $34 million through a grant to build a 300-seat opera house, which has this stunning view of the surrounding mountains. And we went up there and we were just absolutely in awe of it. But I think besides the town itself and the opera, the real reason people come here is because it is a true adventure destination. I mean, we were there for maybe 2.5 days during due diligence, and we'll show you some photos in a second, but we barely scratched the surface of all the things there are to do in this town. You got your iconic things like kayaking, fishing. What did we do? We didn't do mountain biking. We did the Polaris. There's actually a big cat sanctuary. There's a huge, if you can see in the bottom left corner, there's a huge Jesus statue, kind of like the one in Brazil. And then there's this play. What's the play called, Jacobo?
Yeah, it's the Passion Play. It gets over
Passion.
100,000 visitors a year. You're on mute, Michael. I don't know who's
Sorry.
muting everybody. Getting muted.
So this little town of 3,000 people actually draws over 1 million visitors per year. And, the town thrives on tourism and when you're there, it's just absolutely apparent why it's so popular. We went out on a boat, we jumped off cliffs, we rented these like Polaris ATV things. Maybe go to the next slide. Yeah. Yeah, like in the bottom corner, and that was enough adrenaline for me for an entire year. I had to keep reminding the guys that we had to get on a flight later and not get stuck in a ditch somewhere.
We
Uh,
had to cut it short. It was a 2 hour rental. And after an hour and a half, we're like,
I
okay,
was
we've had enough adrenaline. This is way
done.
too crazy.
Yeah, there's zip lining tours, and then pretty cool in the bottom corner. We'll talk about that a little bit, but that's the Crescent Hotel, which is really a key visitation site in the town for ghost tours. And as you can see, it's an absolutely stunning building with a really cool bar on the top, which overlooks the whole town. We spent a lot of time there, drinking tequila sodas, having a good time. And yeah, we'll
It's,
talk more
it's
about
called
that
the
specifically.
most haunted hotel in America. And it's we asked for their occupancy, and it looks like they're 80% occupied all year round, and their nightly rates range between $200 to $400 a night. So they're doing a really good job and killing it out there. But we'll talk about them once we get to the underwriting.
Right. You can see some photos of us, me, Jacobo, and Tim having a good time. There's axe throwing, fishing. They caught like, I wasn't there for the fishing, but they caught like 30 fish and we had them for lunch. We found a Yeti. I mean, we just had so much fun. And we barely scratched the surface in 2 days. So to anybody who's thinking about investing, or just generally, even if you don't invest, I cannot recommend enough going to this town and doing all the things that you do. And of course, if you do invest, we will be putting you up in the hotel and you can go find out for yourself. Oh, and there's wineries. We didn't try that, but I've never heard of the lore of Arkansas wine. But next time we go, we'll have to find out if it's any good.
All right, guys. So in terms of the market, you can see that Eureka sits at the cross border of four major states. That would be Kansas, Missouri, Oklahoma, and Arkansas. And you're also driving distance from Dallas. So just in the surrounding areas alone, we're unlocking over 4 million residents. So it makes it an ideal location for a boutique hospitality investment. Also, most of the hotels there, they're all outdated. We drove probably past a dozen hotels and none of them have amenities. The only one that does have amenities, which is the Best Western, and they're not even nice, but it has a pergola and a kind of a nice pool, and it was packed just because there's really no good offerings. Almost all of them, I would say 95% of them, they're just a bed and a place to sleep. So this market is just waiting for that highly experiential resort. And as is, it already attracts over 1 million tourist visitors. So that's crazy for a small town like this, getting so many people going through it every single year. And it's because there's just so much things to do, like Michael mentioned. Now, looking at the hotels, I'm going to just try and zoom in here a little bit. This was the Best Western that I'm talking about. This is actually the haunted hotel. So it is ugly, and you're paying $200 to $400 a night to stay at something like this. I would never pay it, but people apparently love this. But if you look at the ADRs, they all range from 200, 300, 183, 133. So there's a big spread, and there's solid nightly rates to support our underwriting. And again, a lot of them are very outdated. And now I'm having trouble zooming out of this.
The Crescent Hotel. $400 a night. Sometimes those are the two like super haunted rooms, and those get booked out years in advance. There's like a 2-year waiting list just for those specific rooms at that hotel. Now, obviously, we don't have a haunted property, but it shows that the market can support this.
Right now, getting into the deal, we were able to secure this at $1.2 million. So it's 20,000 square feet. That's the built area. And if you say that, let's say it's at 250 a square foot to build. If you multiply 20,000 square feet by 250 a square footage, well, you're getting $5 million replacement cost for this asset without even accounting for the land value. So we're acquiring this at just 24% of replacement cost. All right. So purchase price, yeah, seller finance, 60% seller finance with 6.25% interest only payments for a 5-year term. That makes it so our monthly payment is just $3,750 per month, which is crazy because I live here in Miami and a studio costs $3,000 a month. So we're getting this asset and getting it financed at pretty much nothing. So it allows us to cash flow and not be able to worry about not being able to coverage our debt service. Now we're projecting a 30% IRR and a 3x equity multiple, which means we're tripling investor capital. Yeah, regarding the stabilized, we're looking at $6.2 million once we stabilize this asset around year 2. Currently, the property is doing $365,000 in revenue, and that's with poor branding, no marketing, no amenities, an outdated property. So it's already running as is and pumping out some decent cash flow.
Okay, so this is the site map. You can see that the property it's kind of long and then it opens up in the back. You actually enter right there from Highway 62 on the left. And what we just found out, what's cool about this is that if you can see that property that says Tapia Silvestre, that's like a random house that's kind of in the middle of the property that has an access road. But the parcel on the left of it, we just found out is ours in the survey. So we actually just came up on an extra acre of land, and it is fully our intention to actually buy that guy's house and incorporate that into our plot. That may be, something that we raise additional money for a little later in time. We will see, but the opportunities here are endless. So you can see it's kind of 10 acres of land that goes down the hill down there. A lot of that is flat and then it kind of slopes down into the valley. But our intention, if you could paint you a word picture, and we'll show you some photos later, is to have sort of wandering paths through the forest with string lights, and really intentional places that you can find, like saunas and cold plunge, yoga decks, even a cinema in the middle of the forest. And we'll kind of show you all the photos in just a minute.
Yeah, so actually it's not 9.6 acres. We're actually going to be at like 10.7, which is great because we weren't expecting that when we went into contract. So that's a bonus there. Now going into the vision, again, we've done this before with our Airbnbs, but we're going to make it into an experiential resort. First, we're going to add some pickleballs courts, which pickleball is the fastest growing sport in America right now. We're going to have a social barbecue lounge area, fireplaces, a game room, mini golf going through the woods, and a big cinema experience going from one tree to the other. And I'll show you pictures in just a second. We'll have lots of places for people to connect, glamping nets, swings, swings among the trees. And of course, we'll tap into that wellness aspect with the infrared saunas, salt sauna, cold plunges, and really nice jacuzzis. Now, keep in mind, once we go into the underwriting, we're not underwriting for all of the extra revenue sources, which we'll talk about in a second. But this is just to show you that we've done this before with our Airbnbs. And this same concept is what we're replicating into the boutique hotel. So these were some of our properties that we did. Basically, we would have a fake beach. We would add the sauna. We would add the fireplace area. And these were 95% occupied all year round. And we were in the top 0.1% of all listings in terms of performance. So vision and guest experience, again, right now we have this simple pool, but we're going to plan and convert that into a really nice pool with a deck extending into the trees, into the forest. We're going to have the pickleball courts with the fireplaces. And then once you get into the forest, we're going to have a deck with light strings everywhere, hanging swings that you can just stop by and enjoy nature. These are just some more photos. The idea is to have different places for people to stop, meditate, read, and just enjoy the forest area that we have. Because again, we have over 10 acres to really use it. We're also going to have a wedding space area that we can rent for weddings, and we'll talk about how that's going to impact our income and our valuation, which is not included in our underwriting. We have here as well these jacuzzi that we want to build, these other areas, and just cool Instagrammable places, because that's what people love right now. They want a place where they can take photos, and that's really going to help our weddings and events venue as well.
Yeah. So we'll talk really quickly about depreciation. So if any of you are familiar with multifamily and cost segregation studies, we will be doing a cost seg on this. However, the first cost seg will be based on the 1.2 purchase in 2025. Then we're going to pump a ton of money into this property. So we're raising about $2.5 million. We only need 440 to put down. So most of the budget is going to go actually into fixing up the property. And so what that means is we'll probably do a second study in year 2 at the new valuation. So essentially, it'll be like the gift that keeps on giving. Our current expectation is that if you invest 200,000, you could probably generate between 60 and $80,000 in losses. But again, that is an estimate. We will let you know what that actual number is once we get the cost seg study.
All right. So again, just to wrap up on why this is a unique deal, 60% seller finance at 6.25% interest only payments. That means we're only paying $3,750 per month. That's for the whole hotel, which is crazy. We're also buying it at just $20,000 a door versus $40,000 market average. And at a $1.2 million purchase price versus $5 million, you can see the huge value that we're acquiring this from. And like Michael likes saying, you make your money on the buy. So we're getting that right for sure. Our total project cost is going to be around $3 million with the 6.2 projected stabilized value at a 11 cap rate. So it's really a rare opportunity that combines incredible financing, below market acquisition price, and a substantial value add opportunity. Now, getting into the underwriting at $141 a night with 60% occupancy, that puts us at $1.7 million in revenue. And at a 39% profit margin, we're looking at an NOI of $681,000. Now, the market's cap rate's 11%. So if you divide the NOI divided by that cap rate, which is 11, you're going to get a $6.193 million valuation. Now, this underwriting is based on 3-star dated comps. So once we reposition, we believe we could achieve nightly rates closer to $200 a night, which will imply a valuation of $8 million plus. Now, we also didn't account for any other revenue sources like weddings, RVs, glamping sites, or events. None of that is included in our underwriting. So, Michael, why don't you talk about the untapped potential that we have here?
So, like he said, as it is, our current underwriting model is based on $140 a night, which is a number that the market has already proven that it already gets. So it's pretty low. It's a very, very conservative number. And what we're not including in that at all is we have 10 acres, right? We can do a ton of stuff. We could add some RV pads. We could add some luxury tree houses. There's actually some tree houses down the road going for sale for $500K per tree house. And we've already been in contact with the builder of that tree house. We could add just some camping and glamping sites in the forest. We've even talked about adding Tesla superchargers. We can have relationships with local vendors like kayak rentals and boat rentals and all these kinds of things that generate kickbacks. This is the true beauty of this compared to multifamily is that this is a business with tons of alternative revenue sources that we have not included currently in the underwriting at all.
That's the first thing we're going to implement and add technology to this. We're also going to do self-check-in. Right now, they have these old keys they give you to check in. We're going to have 24/7 self-check-in. We're also going to use virtual assistants for the back-end support. So if we don't need to have payroll in the US, we're going to outsource that to a place that's going to be way cheaper like Colombia or the Philippines. So that should really help us boost our profit margin. And of course, we're going to add and integrate all of our marketing strategies. So SEO, ranking on Google, all the digital marketing, listing optimization, boosting our ranking on the OTAs, and running ads and working with influencers. And of course, the integrating and implementing the vision that we just discussed here. So all of the rebranding and design into a wellness experiential resort.
Okay. So, um, you guys are all probably here because maybe you've heard of syndication before or you've never done something like this. But basically, the reason that we are able to put this all together is because we have the experience, we have the knowledge. You want to participate in things like this. Maybe you've thought, if anybody's ever thought, oh, I'll just buy a duplex, it'll be easy. You probably learned out the hard way that it's not. And being a real estate investor is a full-time job. So this to you is a completely passive deal. You get all of the advantages of real estate investing, the cash flow, you get the appreciation, and you get the tax benefits, but you mitigate your risk by letting us take that on for you. This is a completely passive investment. You have no liability in the outcome of this deal. You just get the benefits.
So going into the three investment tiers that we have here, the minimum investment is $50,000, and that means you'll get an 8% preferred return. And after that preferred return, we're going to do a 50-50 split between the limited partners and the general partners. The gold tier, if you invest $100,000, you'll get an 8 pref with a 60-40 split, which means the investors get 60% of the deal after the 8 pref. And then the platinum tier, which is over $250,000. That way you get 10% preferred return and a 70-30 split. So I know we have here some complimentary nights for the gold and platinum tier, but for anybody that wants to invest in this deal, it doesn't matter how much you invest. We'll put you up at the hotel. Go and check out this market, check out the deal. We'll be happy to host you, even if you're on the silver tier.
Yeah. And I do want to say really quick that the 3x 30% IRR that we've been touting is the silver tier. So if you invest gold or platinum, your return will likely be greater than that.
So going into the sensitivity analysis, this is where we look at the base case, which is at 60% occupancy and $141 a night. Our gross revenue is going to be 1.7 million. And at the same margin that we discussed, which is 39.4%, we're looking at $681,000, which again puts us at 6.2 million almost. Now, if we do go down to the downside number 3 on a pessimistic, and let's say we were only at 50% occupancy and $115 a night, we would still be at almost $2 million in revenue, and our valuation would still be 4.2 million. Now, if we do really well and we're at 70% occupancy, look at upside number 2 and $175 a night. Well, that puts our gross revenue at 2.5 million and our valuation at almost $9 million. So even in the worst case scenario, assuming that 50% occupancy and $115 a night, our implied value is 4.2 million, which greatly exceeds our total project cost of 3 million, preserving significant equity in the deal. So even in the most pessimistic scenario, this is what our returns will look like. 20%. Yep.
Well, I want to say something really quick about how we've de-risked this investment. So we mentioned previously that the mortgage that we're going to be paying to the seller is $3,750 a month. This property actually already has 4 long-term tenants who are paying $300 a week. So we are cash flow positive basically no matter what here. And I don't foresee any situation in which we couldn't come up with the $3,700 a month. So if you really want to talk about a de-risked asset, this is where we are.
So there's a question here. Do you have cash flow per month for each investment?
Like a breakdown per tier, you mean?
Yeah, I think we'll walk through that in a second. Yeah, I think that's the returns.
Yeah. So basically, the question is just to keep things simple. So think about it like if an investor put a 50K, how much is gonna make a month and a year, so we can quickly say cash on cash X.
Yep, absolutely.
Yeah, so that's it. That's basically the question. Thank you.
Yep, thanks. It's coming right after this slide. So I'll show you in just a second. Basically, in our downside scenario, which is this one, downside 3, our IRR is still 20% with the 2x equity multiple, which means in worst case scenario, we're still going to double investor capital. Base case, it's a 30% of the 3x, and upside is close to 50% and a 4x. Now, to get to your question, we didn't model it with 50K, but we did it with 250K, but it's going to look exactly the same in terms of the cash on cash. And if you invested $250,000, Well, that's going to put you year one, because again, we're doing all this rent, remodel, and stabilizing the property. It's going to be $34,000, so a 14% cash on cash. But after year two, you can expect a 20% cash on cash yearly, purely from cash flow. And then year five, it's going to be 138%, including the exit. So total distributions, worst case, you double your capital, you invest 250, you get $527,000 in total distributions.
I'm gonna let you go through that, and then we have another question.
Perfect. Yeah. Base case, first year, you're 13% cash on cash, so 33K. Year two, 76K, which is 31% cash on cash. And it keeps going until year five, where we expect $482,000 from the sale and total distributions of $750,000. So we're looking there at a 3x return of capital. And then in the best case, obviously, if we outperform, if we add the weddings, if we add all this extra stuff, which we're not even accounting for in our underwriting, we're looking at $80,000 first year. And from there on, it's looking like $116,000 a year, which is 47% cash on cash. In the sale, you're going to see $687,000 for total distributions of $1 million. So in that case, you would be at a 4x return of capital. And I think we could stop here for that question.
Yeah. So the question was, how many resorts around the country are experiencing a downturn softness and occupancy this summer? How is the overall area market doing? Well, I'm not familiar like around the country, but what I can tell you specifically about this market is that it was popping. I mean, really, it was busy while we were there. He said, like we said, we drove through the Best Western Motel, and every single parking spot in that place was taken up. We were out on the lake. There was tons of boats and tons of people out on the lakes. And I think right now, like 1 million visitors a year, but a lot of that too is just that local Northwestern Arkansas. They leave on the weekends and they go to Eureka Springs because why wouldn't they? Because it's amazing. Jacobo, if you want to add anything.
Yeah, well, I guess that question, and I'm speaking from the experience when we were doing also the short-term rentals, you would go into all the investment groups, Facebook groups, and everybody's like, what's going on? My occupancy is terrible. We're doing so bad. Airbnb's dead. You always hear this. Airbnb's dead. Hotels are dead. In every single industry. Back when I was in Amazon, it was the same. Amazon's dead. And a lot of people might not be doing well, but then you have all the other people that are doing well because they have something different. They have something unique. They're adding value. Their property is not the same as the other. So we were, again, our short-term rental portfolio was always 95% plus occupied across all of our rentals. We never saw any softness. Even when people were talking about softness and their occupancy dropping, we never saw that. And it was because we were unique and we were different. So from that experience, we wouldn't even look at other properties that are not considered unique or experiential resorts as comps for this. And I think when you have a good value proposition, you are more resilient to downturns as well.
Yeah. I think something else that nobody in this space is really taking advantage of is the influencer piece. I mean, this is how people consume content nowadays. This is how people find places to go. We were just talking about that hotel, where is it, in Washington, that had those like just structures in the middle of the forest that like looked really cool, and people could go take an Instagram photo. And that's how it works nowadays. You hire an influencer, you give them a couple free nights at your property, they make a video about it, and it blows up. And if you have something really special and unique, they're definitely going to take you up on that offer.
Yeah, I guess we'll talk about Outpost X later when we get to the questions, but let's finish through these slides and then we'll go through all the other questions that are on the chat.
One quick question, winter season. So winter is a little bit slower there, but the peak month is actually October, which is when we'll be closing. And that's when the leaves change color. That's why it's the biggest month there, because everything turns orange in fall and autumn. And
so January and February are the off months there,
Yeah.
but we think through our wellness and the saunas and the cold plunging and what we're going to bring to market, we're going to maybe not see too much of that seasonality. Of course, it's not going to be packed like summer, but we're thinking if we're able to sell the Christmas vibe, hot chocolate, and be able to market even throughout that season when it's snowing, which is 2 months that is off season, the rest of the year, it's pretty packed and pretty busy. Even like Michael mentioned, not only the summer, but going into October, which is the best month to be in Eureka Springs. In terms of sources and uses, again, we're getting debt from the seller. He's the bank for $720,000, and we're raising the rest as equity. That's going to be a breakdown of the so total project cost of 3.1, which is broken out as 1.2 million for purchase, capex and FF&E of 1.7 million, and then closing cost, reserves, and marketing of $245,000.
So what does this look like for you, the investor? Well, we're going to be doing quarterly distributions. So we have our investor portal where you will make an account. You will connect your bank account. You'll receive distributions through there. You'll be able to sign all your docs in the portal. You'll receive your K1s in the portal, and you'll receive investor updates from us. They will also, you'll get an email notification whenever there is an investor update. And we'll be doing quarterly distributions and probably a quarterly video update. We'll send you photos of the construction, everything that's going on at the property, let you know how things are going. And our expectation is that probably by year 2, everything will be fully stabilized and operating smoothly, and you'll be receiving cash flow. And by then, you might not even care so much. But we do really hope that you will, come out and visit the property and see for yourself how everything is going. And additionally, if you don't have our cell phones by this point, we will make sure at the end of this that you have both mine and Jacobo's cell phone number, and you can text us, call us anytime. So the next steps, do we have the portal live, Jacobo?
No. So the attorneys are finishing up the syndication documents and the PPM, which is the private placement memorandum. In there, you're going to be able to see all of the deal disclosures. You're going to get kind of like a deck, but it's the legal side of the deck with all of our disclosures reviewed by the attorney. So you're going to have the investment portal with your own login. You'll be able to review those documents. And then from there, you'll be able to sign and verify. I expect these documents to be ready within the next week so that we can start actually getting some commitments and doing capital calls. So
correct. And so just so you guys know, as of today, out of the 2.5 raise, we technically already have about 2 million in soft commits. So there is a lot of interest for this deal. It is filling up very, very quickly, I think for very good reason. I hope, you've enjoyed this presentation. You're able to tell how excited we are about this deal. Now, nothing really matters until the money is in the bank. So if you are interested in investing, if you're serious about this, I would encourage you to place a soft commit just to hold your spot. And we can take it from there. You'll be notified when the portal is live and when you're able to sign docs. Here are our cell phone numbers, and at this point, we'll be open to questions.
you guys can just drop them in the chat or unmute yourself if you want to ask any other questions.
So the capital call schedule is basically, we have really no risk of not closing here. I mean, GP contribution alone is 250,000. We only need 440 to close, but we still have about 60 days left before closing. So there is quite a bit of time. I would really say that this is a first come, first serve kind of situation. I would not be surprised if the raise is fully subscribed or oversubscribed. And so I would say, take action here. Don't wait on this if you are serious about it. Any more questions? Feel free to unmute yourself if you have one. All right. Well, if you have any additional questions, if there's things that we didn't address.
I don't have a question since no one asked. So is this a GP deal or a LP deal? Like the contribution that you said to, I don't know, for all these tiers, silver, platinum, gold, is this a GP or LP deal?
Those are LP. So Jacobo and I are the GPs on the deal. You all would be the LPs.
So for the GP, you said also that you only secure 250 and you need 450, so you still need 200K. How are you gonna secure? Yeah, how are you gonna cover the gap?
Because we have 2 million in soft commits already, that we are extremely confident people who will put the money in, and we have more than 60 days to get it. I personally believe this will be oversubscribed probably within a week, if I had to guess.
So the soft commit that you're saying, the 2 million, these are from GPs? or they're gonna be
From
LP?
LPs.
Okay.
So we opened this raise 2 weeks ago and started just quietly reaching out to our investor base. And between those, we already have over $2 million in commitments from them. So we only need $400,000 to close. So we are guaranteed we're closing on this deal. Everything else that we're raising is for the remodel and the construction. But again, we're pretty close to just closing out the raise. So we're in a really good spot right now.
Well, thank you.
Yeah.
Thank you.
And Jacobo, you just put your Calendly link into the chat. I'm going to put mine as well. So if anybody wants to book a call directly, they are able to do that.
Yep. Awesome. If you guys want to have a one-on-one, you can just either text me as well or text Michael, and we can jump on a one-on-one. Happy to dig deeper into any other questions that anybody might have.
So another question, do you guys have, when you're going to be able to share the 12-month performance, at least for 24, so we can make sure that these numbers make sense? Like, when we'll be able to have these, numbers available for investors?
Yeah.
So,
Like, I get the numbers you're saying,
Yep.
and being optimistic and everything. I just want to make sure that the 140 or 145 per night, it actually, like, I can see it throughout the year, the average, right? Because I just want to see these numbers from a, like what we do in any deal, and
Yep.
shared with us. Because why would I commit to something just in a? I would love to see the actual numbers.
Of course. So you can shoot me an email, and I'll be happy to share with you the reports from CoStar showing the performance of comparables in the areas. I can share with you the full model that has over 15 tabs with the underwriting, sources and uses, fees, everything's outlined there. And then again, inside the PPM, which is the legal disclosure, we also have all of the information and market reports. So that's all available upon request. If you want to see any of that, you can email or text me, and I'll get that over to you.
Sure. Thank you so much. I appreciate it.
Something else that we kind of just glossed over in the beginning, but I think is pretty interesting to note is that, so, I mean, our mortgage here to the seller, to the bank, is going to be roughly 40 grand a year. The property as is right now, keep in mind, it's in rough shape. It's not rough shape. The rooms on the inside are nice. We stay. Yeah, but no amenities, nothing special like that. It's operating about 30% occupancy right now and is still doing close to $400,000 a year in revenue. And that's with no optimizations, right?
No
And,
marketing.
yeah, a really bloated salary for an asset manager who's not doing anything. So just with a few optimizations and a slightly higher occupancy, we're going to be able to really capitalize on that. Not only that, but the seller has actually given us $50,000 in future bookings. So Jacobo, maybe talk about that for a second.
Yeah, so there's actually a bikers club that wants to book out the full property in January, and I think that alone is like 20K that weekend. So he was asking me when I was there if we still wanted to have those people come by. Now we do need to check with renovations and the schedule with the contractors on how many rooms we're actually going to have available for them, and that's not going to disrupt their stay. But the good thing is we're not going to rebrand into the Springs Retreat. We're going to stay as the Travelers Inn until we're done with renovations. That way, if we get bad reviews, if people don't have the best experience, because of course there's going to be contractors on the property and we're doing phase renovations, which might cause minor disruptions, well, that's not going to be affecting the brand of the new hotel, because our idea is to not shut down fully and be able to still be collecting revenue so that we can start investor distributions as soon as possible. And we're projecting that within 6 months, we'll be able to start distributions just because of these phase renovations. And also the good thing about this is we have 4 different buildings and they're not too close one to the other. So we can start working on one building and also in the forest inside. That's not going to disrupt our guests. So that's a really good thing as well that we have going on with the deal.
All right. Do we have any other questions? Thank you all for attending. This has been a lot of fun. If you haven't seen the vision video yet, I highly recommend you watch the vision video to kind of really get a sense of what we hope to do here.
Yep. Thanks, everybody.